Hey YouTube, welcome back to another video. This is my financial focus, and in this video I want to talk about Tesla and do an in-depth investment review of Tesla's stock and their business. I'm going to start by doing a discounted cash flows analysis and then going through their annual report, and I'm going to review their financial statements and just try to figure out or explain what their business actually does, how they make money, and everything like that. So if you're new to the channel, be sure to leave a like and comment down below to let me know what you guys think of the video, and subscribe if you're new, and let's get right into it. So the first thing that I'm going to want to do is pull up the discounted cash flows intrinsic value calculator that I've made here on Excel, and I'm just going to find these separate values as I do in all my videos for the businesses that I'm constantly analyzing. So the first thing that I'm going to want to find is the growth rate, and for some of these values I'm going to be finding them from Yahoo Finance and also from TradingView. And for Yahoo Finance, for the growth rate, we can find it just by going to analysis, scrolling down, and we see that for the next 5 years they anticipate a 73.06% growth rate. So I'll just put that in right here. For years 6 through 10, I'm just going to be conservative, because if we're trying to value an investment from a buying perspective, then being conservative is better than overestimating how much we should spend for the business. But we can always play around with this value afterwards to try to figure out, like, depending on different growth rates for years 6 through 10, what a good buying price would be for us to buy Tesla for a good return on our investment. For the year one free cash flow, I'm just going to go to TradingView and then type in Tesla, pull up the stock, go to financials, cash flow, and I'm just going to scroll down, and we can see free cash flow for the year ending in 2020 was 2.71 billion. Then for the net cash minus net debt, I'm just going to go back to Yahoo Finance here. I'm going to scroll up, go to statistics, and we can see total cash 16.09 billion, total debt 10.16 billion. And if we subtract that from one another, we get 5.93 billion. Stock ticker is Tesla, and the shares outstanding we can find right here. Shares outstanding 1 billion. And after plugging all those values in, we can see the anticipated free cash flow as well as the free cash flow discounted back to the present value. And we can see that the intrinsic value per share for Tesla based on this discounted cash flows model is $269 per share. Now, compared to the current share price of $1,128, it would seem that Tesla's share price is overpriced, but keep in mind that discounted cash flow models aren't fully comprehensive. They aren't perfect. There obviously are a lot of assumptions, like the growth rate, and Tesla probably isn't going to grow by 10% in years 6 to 10. It would probably grow a lot more than that. So for example, let's say that we replace this value with like 55%. And we scroll down and we see that the intrinsic value per share is about what the current intrinsic value, or what the current share price is for Tesla. So the current share price based on our discounted cash flow model and based on Tesla's current free cash flows and net cash and net debt would basically anticipate a 55% growth rate in years 6 through 10 to justify the current price per share. And then this would be how much we would want to buy the stock at for a 30% margin of safety, $782 per share. And then for a 50% margin of safety, like $500. But like I said, this isn't a perfect model, but it is a tool that we can use to reference when we're trying to value a business. So the second thing that I want to do is I want to start by looking through Tesla's annual report, which is something that I don't see too many YouTube channels on YouTube do. A lot of people like to talk about the news, which is fine, but I'm just going to take a little bit of a different angle here, a different approach, and look through their annual report and just do an in-depth analysis of their business. So the first thing we could see right here, right out the gate on page 4, we see them talk about their business, how they make money, as well as their products and services. So I'll just quickly review these because I think it's pretty interesting. They have the Model 3, which is this car right here. They have the Model Y, and they do a little bit of a description of each car as well. You can see Model 3 four-door midsize sedan, Model Y compact sport utility vehicle. They have the Model S, which is this one right here, and the Model X, this one right here. And they talk about how they started delivering it in June 2012, and that it's also a four-door full-size sedan. And then they also talk about the future of their consumer and commercial electric vehicles, one of which being the Cybertruck, is pretty popular, and the Roadster, which is like an electric sports car, and then also a commercial semi-truck, which is pretty cool. The next thing they talk about and how they make money, the products that they make, are their energy storage products like the Powerwall, the Power Pack, and the Mega Pack. This right here would be the Powerwall for residential homes. Then the Power Pack, which is like a bigger version of the energy storage unit, and then the Mega Pack, which is like a way bigger version. And lastly, they talk about their solar energy offerings, particularly their solar roof technology that they're going to be implementing, or that they've started implementing, but obviously in the future are going to try to bring to mass scale, which is this technology right here. They basically just turn the roof of a home into a solar panel, which is pretty cool. Powers the house, and when everyone else's lights go off in the neighborhood, their lights will stay on because they have solar technology, which is pretty cool. All right, so the second thing that I want to point out is just a couple of performance metrics for Tesla in the year ending 2020. For Tesla, just fun fact, they produced and delivered about 500,000 vehicles, and then they also have, they have factories that are located all over the world to build their products, like in Fremont, California, Sparks, Nevada, Buffalo, New York, Shanghai, China, Berlin, and Austin, Texas. And so now the third thing that I want to look over is the risk factors for Tesla, because I see a lot of people on YouTube hyping up Tesla, as they should, because it's a really good business, and Elon Musk is obviously a very impressive entrepreneur and CEO. But for me personally, whenever I invest in a business, I want to learn what all of the bad things are about the business, so that if Tesla's share price ever does sink, then I can at least pull on some reasons for why that might be happening. So the first risk that they point out here, or the first couple of risks that they point out here, one of which I found interesting, was that they might struggle in the future with bringing their Model 3 and their Model Y to mass production, because they don't have much experience dealing with extremely high volumes. As I said, in 2020, they only produced 500,000, which is a lot of cars, but compared to obviously the market for cars, which is the entire world, it's not really that much. And they have even less experience building and ramping up their vehicle production lines across their multiple factories in the different geographies they have. Also, another risk that I thought was interesting was that the supplies that Tesla gets for their cars and their energy storage units come from single source suppliers at the moment, so they don't have long-term supply agreements. And this opens them up to shortages, potential risk of supply shortages like the current global chip shortage, which the consequences of which are still unknown to Tesla, and also like their 2012-2016 component shortages, which they experienced with their Model X and their Model S. The third out of the 5 risks that I want to talk about here are the risk of their lithium-ion battery shortages, because they rely pretty heavily on lithium-ion batteries to to build all of their energy storage units. Panasonic at the moment is currently their only lithium-ion battery source, and they don't have much flexibility in terms of like getting their lithium-ion batteries from different suppliers. So their solution is to try to make their own lithium-ion batteries, but obviously that requires a lot of funding, and they don't have that much experience ramping up production in that area of their business. So if they can't figure that out, then their operating results could be adversely affected in the future. Also, something else that was interesting that this annual report pointed out, I forget what page it was on, but they pointed out that Elon Musk is, here it is. They pointed out that Elon Musk is very essential to the business, but since he's obviously the CEO of Tesla and SpaceX, his energy is diverted between the two operations. So that might pose some challenges for Tesla moving forward. And then the last thing that I wanted to talk about was probably the thing that everybody on this video came to see besides the intrinsic value analysis, which is just the risk to Tesla's share price of their common stock, which over the last week has gone up 18%, last month 44%, 3 months 67%, 177 over the past year, and 2,700 over the last 5 years. So they've been doing pretty well so far, but obviously it's good to understand the risks of what could impact the share price negatively in the future. So one of the things that they talked about was that technology stocks in general sometimes seem to move in ways that are disproportionate to the company's operations. So that's pretty similar to what's happening with Tesla, I would say, because price to earnings ratio 360, it's not really that normal. That's kind of high, especially considering that Tesla only delivered like 500,000 vehicles in 2020, yet their business is valued higher than like every car company in the world, which is interesting. And something else that they said could impact Tesla's stock is that it gets a lot of attention from short sellers. So that obviously might cause price fluctuations either up or down. And the last thing that they talked about was that Elon Musk, the CEO, he uses Tesla's stock as collateral to loan out to different banking institutions so that he could procure loans for himself, and they use the shares that he gives them as collateral. So in the event that Tesla's share price ever dropped, Musk might have to sell those shares to these banking institutions at the predetermined price that they agreed upon. So that could obviously cause the stock price to fall significantly lower. Okay, so the next thing and the last thing that I want to do in this video is probably the most important, which is to review Tesla's financial statements, which start on page 40, because it's always important to see what a business's underlying financials are looking like if we're going to invest in it. So right here we can see that the revenues are broken up by automotive sales, automotive leasing, total automotive revenues, added those two together, and then also their services and their energy generation and storage segment revenue. We can see that their automotive sales have increased over the years from 2018 being $17 billion to now 2020 being $26 billion. And then their automotive leasing has also, it fell slightly from 2018 to 2019, but then increased again in 2020 to $1 billion, totaling out their 2020 automotive revenues at $27 billion. And we can also see on the right side here the percentage change in revenues from 2019 to 2020, and then also from 2018 to 2019. We can see that their automotive sales increased by 13% from 2018 to 2019, and then by 31% from 2019 to 2020. So their growth rate is increasing, which is obviously a good sign. And their total revenues increased by 15% from 2018 to 2019, and then by 28% from 2019 to 2020. The second thing that I want to look at here is their cost of revenues and their gross margin. We can see that their cost of revenues have also increased over the years, increasing by 24% from 2019 to 2020, and they totaled out at about $19 billion in 2020. So after doing the calculations, figuring out what their gross margin is, we can see that their gross margin for 2020 was 21%. Next thing that I want to look at is page 46. And right here, we can see a quick summary of their cash flows. We can see that in 2020, from their operating activities, which is their business operations, they were able to produce about $5.9 billion in cash flows, and they invested about $3.1 billion, and then they raised about $9.9 billion. And it also breaks down what that entails down here. We can see that their investing activities included their expansion of their Gigafactory in Shanghai, Model Y production expansion in Fremont Factory, and also expansions in their Gigafactories in Berlin and Texas. And then also their financing activities, we can see that they raised from issuance of common stock. So that's interesting to see. It's always important to understand a business's financials if we're going to be investing in it. Next page I want to look at is page 54. This is their balance sheet. We can see that their total current assets increased a lot from 2019 to 2020, from $12 billion by the end of 2019 to $26 billion by the end of 2020, and also increased a lot in terms of total assets, not just total current assets, increasing from 34 billion to 52 billion. Total liabilities increased from 26 billion to 28 billion. So not nearly as fast as their total assets have increased, which means that their total equity has obviously increased substantially from only 6 billion in 2019 to $22 billion in 2020. So it's always a good sign to see that a business's assets are increasing faster than their liabilities are. It increases their cash position and also just positions them better for future growth. Now on page 55, we can see their consolidated statement of operations, otherwise known as their income statement. Total revenues have increased quite a bit. Gross profit has also increased from 4 billion to 6 billion. And then net income right here, we can see they used to lose money in 2018 and 2019, and 2020 they were finally profitable, which is a great sign. Now I want to go to page 58. This is the second to last page I'm going to be reviewing. This is their consolidated statement of cash flows, otherwise known as their cash flow statement. That's how some people like to pronounce it. We can see their net cash provided by operating activities has increased quite substantially from 2 billion in 2018 to almost 6 billion in 2020. Their cash from investing activities, they've been investing a lot over the years, and they've started investing more recently. In 2018, they invested 2 billion to 1.4 billion in 2019, and then 3.1 billion in 2020. And their cash flows from their financing activities, we can see that they've raised a lot more money in 2020, raising 9.9 billion, up from 1.5 billion in 2019, and up from 574 million in 2018. And then finally, last page that I want to look at for my investment review here is just a little breakdown of the geography of where their revenues come from. We can see that for their automotive segment, their revenues down here, we can see about 15 billion of their $31 billion in 2020 revenues came from the United States. 6 billion came from China, and 9.6 billion came from other geographies around the world. And that number has been increasing quite a bit from 2018 to 2019. We can see that in the United States, their revenues have stayed relatively flat, but in China, they've increased quite a bit from 1.7 billion in 2018 to 6.6 billion in 2020. So their growth in China may or may not be a pretty substantial part of their future revenue growth, which is important to understand. So that's about all I wanted to talk about with Tesla. Just did a quick intrinsic value analysis for their business based on their current financials. I think that Tesla is positioned to grow. Obviously, everybody knows Tesla and Elon Musk. They're doing quite well. As far as investing in the business for me, I think I may or may not invest in it. I'm not too sure. I am a little bit worried about the current P ratio, but I'd definitely be interested in knowing what everyone who's watching this video thinks about Tesla as an investment, and I'd like to know how many shares you guys own, because I always like talking about that kind of stuff. It's very interesting to me. If you guys found any value out of this video, be sure to leave a like and subscribe to the channel if you haven't already, and I'll see everyone in the next one.